Good morning, traders. This is Tony D from easyMarkets in Sydney. NFP Day is here again. We have a US dollar, though, that is very strong leading into this announcement, which is setting up for some interesting times. If the market is stretched one way or another going into what is the biggest piece of economic news each month, it does create for more volatility as it does require a little bit more of a better data there to continue the US dollar strength through new levels. And then if it's weak, you can see snapbacks. Now, some people are suspecting that a weak number tonight won't cause much selling of the US dollar at all because everyone will shrug it off as to just the just the hurricane effect. But do bear in mind that there is two pieces of data that are coming out tonight that are very important. Not just the NFP, but also the average hourly earnings is growing in importance. Now, this is the big one in terms of where the market is forecasting a jump up here to 0.3% month on month, whereas normally it's 0.1% last month, and that's a big increase in a month on month basis. So if that misses, inflation comes in weaker than expected, you can see some whipsaw coming through quite quickly in the US dollar, leading to some potential profit taking from this recent rally. Which pairs are showing the most oversold conditions? Well, certain the commodity currencies are well advanced in their rallies at the moment. So in their sell-off, the Aussie dollar is broken below 78 overnight. The dollar CAD has pushed higher towards 126. New Zealand dollar is hitting fresh lows as well towards the 71 level. So 70 cents is obviously on the cards here for the Kiwi, but keep in mind the story behind the Kiwi sell-off is the political instability. And what we have coming out over the weekend is an announcement from the electoral board about the final vote count. From there, you can get new new leadership being formed with the National First Party. So you should have government formed in New Zealand next week. So if you're seeing a relief rally coming through against the US dollar, keep in the back of your mind that the Kiwi dollar's probably got good news coming next week, not bad news. As long as it's a party is formed next week, then there should be some sort of relief rally in that pair. That's leading to a little bit of concern if you're long Aussie Kiwi, because if you're long Aussie Kiwi, then you do have to worry about both pairs. The Aussie's pretty weak, the Kiwi's pretty weak, but the Kiwi's been weaker. But if next week it was to change its stripes, then you could see that the Aussie Kiwi goes back under a little bit more pressure. So those who are looking for a trade here on the crosses, have a look at the Aussie Kiwi. It has failed at 110. We had some terrible data yesterday from Australia in terms of our retail sales was badly missed, minus 0.6% versus 0.3% forecast, and that's put a little bit of a dark cloud above the Australian dollar. So that could lead to, in the two-horse race between Australia and Kiwi next week, a little bit more of a downside risk here. And if you're looking at, say, some of the other pairs though, like the dollar yen should be a lot higher than it is currently, given the surge in US dollar throughout the week, and the stock market is making daily fresh record highs. It's struggling to get above 113 and hold it. That means that any potential reversal here in the US dollar can lead to pullbacks quite quickly in the dollar yen as support, which has been given to it, hasn't been followed through. So there's already question marks about the rally on this pair. As to why the dollar yen isn't higher, the most sensible reasoning I can see is that the pound yen and euro yen selling that you've seen in the last 2 days has just been too strong. So if we look at the pound yen just quickly, and we'll talk about the pound broadly as well, the pound's been hit after May gave a speech on Wednesday in which she came across very weak and without it really reassuring the party. Calls for her resignation have grown steadily in the last 48 hours. This is a pretty short-term story in terms of the impact on the pound. Either she gets kicked out or she stays on. Either way, the market bounces. But first, it might go to 130 or 129 to 128 if the instability lasts, or if the decision isn't made quick enough. Now, after that, though, you do have the Bank of England likely to raise rates in November, so that's the supportive side of it. It's a very dangerous time to be contemplating the longer term future for the pound. The bears are having the field day at the moment, but the potentials for reversals later in the month are very real, and good news politically can come pretty quickly. So if you are short pound, just be careful over the weekend, because there should be a lot of speculation through the financial press over in UK. On the top side, on the pound yen down to below 150 here, towards that 148 support, broke 148 pretty convincingly last night, but has stabilized a little bit, and it was the favored pair in the huge rally last month. So the pullback here is probably a bit more profit taking, a little bit more searching for that support that was so evident last month. Where it comes in and what level we look to start to potentially look at buying this pair. The 148 level is the one being broken and tested at the moment. Is really up to perhaps just a combination of this political instability in the UK coming to an end, and the dollar yen starting to behave a little bit more rationally than it has in the last week. So that could be an interesting one to watch next week. Tonight it will be in play, given that the dollar yen always moves with the NFP, but the next big move coming forward for pound yen is probably mostly driven by what's going on with the pound itself. All right, guys. In terms of the NFP, what you should be looking out for is first along the headline reaction that comes out. So the number comes out. If it's forecasted around 100,000, if it's 50,000, maybe the market will start to get a little bit concerned that it's not just a hurricane, and be more open to having a sharp US dollar sell-off. Don't think that 100,000 is that weak, though, given that the market will shrug it off as being just a dip given from the hurricane. Quickly check what the average early earnings is. If the headline number is broadly as forecast, so if it does come into 100,000 and then there's not much movement, but then this market starts to move one way or the other, almost guaranteed if the market starts to move slowly after an announcement, it's because the average hour earnings is being dissected and looked at, and that's where you're getting that movement from. So if it comes in hot, you'll see more US dollar buying. If it comes in weak, you should see some US dollar selling. If you have any questions about that, please come through to the hotline below. We can talk about some game theory on a lot of the different pairs you can play tonight, especially the Aussie dollar if you're looking at certain key levels. That's the main pair we do trade here in Sydney. And if you're not a member of the Active Traders Group and you do want to have a little bit more assistance and a little bit of help in getting your trades off and running, please come through to that link below as well, the Active Traders Group link. You sign up there, you can get a dealer like myself or Russell Sanford here in the Sydney desk, and we can assist you with your trading journey. All right, best of luck tonight.